the whale population has been spotted to be increasing rapidly. This, as they say, is definitely good for Bitcoin.
Well, is it still whale breeding season, David? That's what we'd really like to know. With so much uncertainty in the markets, are we going up from here? Is it a bull trap? Instead of me just adding to the tumultuous amounts of opinions out there on what's happening, yes, I lost the stand. Hopefully it'll turn up soon, don't worry. Let's look at instead what the whales are doing, aka the super rich. What games are they playing?
Many, sadly, get completely wrecked.
Are they accumulating Bitcoin? Are they selling Bitcoin? Let's find out. First up, let's check in with the Bitcoin miners.
Oh, hi. Thanks for checking in. I'm still a piece of garbage.
The miners, as we know, haven't been exactly good to us recently. At all. Selling massive amounts of their inventory for the past 2 months straight. They're not great at timing the market, so there's some solace in that. But coordinated miner selling has strong evidence of impacting the Bitcoin price negatively. It felt at times as though their selling would never end. But recently they switched to a bit of accumulation. That is a massive 180 on their part and is a very bullish sign. There is this one little red dot though, so they've sold a small amount at these price levels. I am assuming they are neither strongly bullish or strongly bearish in the current market conditions, so I'm chalking this one up to primarily bullish with a little amount of uncertainty. Moving on. For the past year, Bitcoin wallets containing anywhere between 1,000 and 10,000 Bitcoin in them have been in a very strong uptrend. Hence David Attenborough stating it was whale breeding season. He was bang on the money about that one.
It's whale breeding season.
But it has now seemingly stopped. The amount of whales being produced has seen a sharp decline. We can infer then that whales are not accumulating at these price levels and is a bearish. But wait, enhance. More.
Hold it. Run that back.
Wait a minute. Go right. There, preset.
Full screen.
We've seen another reversal to the rapid decline of Bitcoin whale wallets. So they have been accumulating on this dip below $50,000, although tentatively. Much like the miners, they too seem to be a little hesitant. So next up, institutions. Are they accumulating right now? This one is much harder to track. A purchase could be made directly from a miner and we would never even know about it. However, Coinbase has let everyone know that, hey, by the way, we were the guys Michael Saylor went to for his Bitcoin purchases, which, if he then shared his playbook with Elon, means Tesla probably went there too. Imagine Michael just told Elon to go to Coinbase.com and buy from there. Wait, what? But this does make it a little bit easier to find out what institutions are actually doing with their Bitcoin, which is potentially the most important indicator for the mid to long-term health of Bitcoin right now. According to data from CryptoQuant tracking the amount of Bitcoin being transferred out of Coinbase Pro wallets, there has been a strong accumulation below $50,000. February 24th at $48,000 per Bitcoin saw 13,000 Bitcoin leave the exchange, more than $500 million in a single day. Same again, February 25th. January was absolutely crazy at over 40,000 Bitcoin, but outside from that, these two dates are as high as any previous single-day records. So institutions, at least the ones utilizing Coinbase's services, which seems very popular right now, are most definitely accumulating Bitcoin under $50,000, very bullish, which looks set to continue. Twitter just announced that they are seeking to raise $1.25 billion in debt due for repayment in 2026. Now, what they've stated they're going to use the money for specifically is very vague. It's hopefully what we all want it to be. Jack finally buying more Dogecoin. That was meant to be a joke, but I suddenly realized it's not funny at all. Don't do that, Jack. So it's not in their wording that that's what they're going to use it for, but I am hopeful, looking forward to that announcement. Fingers crossed. Now, I'm not trying to say the worst is over. Actually, that's exactly what I'm trying to say. But even whales get it wrong at times. A 26% pullback from top to bottom that we've had just right now would represent a pretty small dip, at least going from 2017 standards. We used to see much bigger pullbacks last between a week and a month at a time. Even in January, though, we had it worse than this. But this could definitely be the short-term bottom, considering the whales are accumulating under $50,000 and supporting Bitcoin going up right now. So those are the things that I think are most important right now. What the whales are doing, Jack potentially buying Bitcoin, me losing my mic stand. But I'd like to hear from you now. Let me know what you think. Is this a bear trap, or is it the resumption of the bull market? Please leave a like if you enjoyed. Thank you to everyone that does, and I'll see you in the next one.
Hey guys, welcome back. Today's project overview is going to be on a project called Cosmos. A little reminder, I'm not a financial advisor. Please always do your own research. All right, let's get into it. Cosmos is a decentralized network of independent parallel blockchains, each powered by DFT consensus algorithms. BFT stands for Byzantine fault tolerance. A Byzantine fault tolerance consensus algorithm is one that guarantees safety for up to a third of Byzantine or malicious actors. In other words, Cosmos is an ecosystem of blockchains that can scale and interoperate with each other. The vision of Cosmos is to make it easy for developers to build blockchains and break the barriers between blockchains by allowing them to transact with one another. The end goal is to create an internet of blockchains, a network of blockchains able to communicate with each other in a decentralized way. With Cosmos, blockchains can maintain sovereignty, process transactions quickly, and communicate with other blockchains in the ecosystem, making it optimal for a variety of use cases. All right, let's talk about the Cosmos Hub. So the Cosmos Hub was the first blockchain that was launched on the Cosmos network, and it's the foundation of it. It was built to act as an intermediary between all the independent blockchains created with the Cosmos network called zones. In Cosmos, each zone is able to carry out its own essential functions. This includes authenticating accounts and transactions, creating and distributing new tokens, and executing changes on its own blockchain. The Cosmos Hub is tasked with facilitating interoperability between all the zones within the network by keeping track of their states. Since the Hub plays a role in everything that happens on the network, it's protected by a decentralized group of validators. This enhances security and makes it possible for the entire network to withstand severe attacks. These validators take a certain amount of Atom tokens with them to pass through the Hub. And if any of the zones start acting suspiciously in an attempt to maybe compromise the integrity of the network, the number of Atom tokens that they get to keep gets reduced by the Hub. I saw a comparison online in which someone said that the Hub removing tokens is like the equivalent of getting demerit points on a driver's license. Eventually, you'll lose the privilege of driving. This deters malicious actors. The primary token of the Cosmos Hub is the Atom, which I just talked about, but the Hub will support many tokens in the future. The real value of these hubs, zones, and the inter-blockchain communication packets is that all parties involved in the exchange of value can get what they want, all while maintaining independent token models, economics, and governance systems. It's as if each of these parties is its own blockchain within the Cosmos network, acting as the internet of blockchains. I previously mentioned the Atom token, so let's touch on that a little bit. Atom is the native token of the Cosmos ecosystem and has a circulating supply of 210 million and some change. It serves a couple different vital functions, serving as spam prevention mechanism, as staking tokens, and as a voting mechanism and governance. As a spam prevention mechanism, Atom are used to pay fees. The fee may be proportional to the amount of computation required by the transaction, similar to like Ethereum's concept of gas. As staking tokens, Atom can be bonded in order to earn block rewards. The economic security of the Cosmos Hub is a function of the amount of the Atom staked. The more Atom that's collateralized, the more skin there is at stake, and the higher the cost of attacking the network. Thus, the more Atom there are bonded, the greater economic security of the network. The Atom token plays a significant role in reducing the likelihood of malicious transactions passing through the Hub, which I touched on previously. The tokens get taken away from the validators if something suspicious is happening. And then lastly, Atom holders may govern the Cosmos Hub by voting on proposals with their staked Atoms. I love the fact that the token use case is so embedded in the platform. It really makes it a valuable asset to hold and also a very functional part of the ecosystem, which should, in theory, promote growth and engagement. Well, that's all I've got on Cosmos today, guys. Thanks so much for watching and take care.